start measuring the value of your real estate in Bitcoin and not in fiat money, and you'll see that it actually loses value against Bitcoin because Bitcoin is more finite. Bitcoin is actually absolutely scarce. So it's a better unit of account, because I think you should use the best unit of account possible to measure things with, because why you measure it otherwise, right? If you think about an athlete, there's the top athlete that, let's say, a sprinter, right? Usain Bolt. He wants a world record. So everybody needs to beat that world record, right? So he set the standard. And we talk about money. The money that's the best money sets the standards.
Leon, thank you for joining me on the podcast. How you doing?
I'm good, Jordan. Thank you. Thanks for having me. How are you?
Yeah, very good. Very good. I first came across you, I think, when your speech at Prague. I'm going to put this in the show notes because I think everybody should watch this. You don't know how much I passed this talk around to friends, just because it's so relatable. Because a lot of people understand real estate, and you tie in Bitcoin really nicely into that. So yeah, firstly, thank you for putting that on. And yeah, we're going to talk all about real estate and Bitcoin today.
Yeah.
But could you take me back? So before we hit record, you said that you studied in the UK. Could you give a bit about your background, getting to where you are right now?
Sure. First of all, thank you for saying that. A few of my friends actually said a similar thing, and that was also my intention of helping people understand Bitcoin through real estate, because through real estate, I also started to look at Bitcoin through a different lens, because my first couple of years learning about Bitcoin, I was studying actually philosophy in Bath. So I studied philosophy and ethics. And at the time, I mean, as we are aware, I'm a 90s kid, so I'm assuming you too.
Yeah.
And I grew up with the internet. And I always wondered why there's no native currency on the internet. I was always very much into math. I was into economics, finance. And I thought it was strange anyway that the internet had no money. And diving down philosophy and ethics, a friend of mine, by accident, introduced me to Bitcoin because he was using it to pay for something. And I saw that and I was like, well, that's pretty cool. How do you do it? And then he said, oh, I'm using this internet currency from China. It's called Bitcoin. And I was like, okay, I didn't even question what it was. I just kind of accepted that now we have an internet currency that comes and originates from China. Obviously, that's not true, but that's what I thought. And then people used it, and in university, it was a thing that people talked about. People discussed Bitcoin. And then I studied financial economics in Glasgow in Scotland at the Adam Smith Business School.
Wow.
And then I started to understand that Bitcoin obviously originates not from China, but potentially, I mean, the cypherpunks, which is the mailing list in the 90s that people communicated with to discuss, different topics on freedom and computer science, and that also Satoshi Nakamoto was part of that. Timothy Mail, the programmer who initiated that list, he was working, I think, for HP. I'm not sure, but he was living in San Francisco. So the idea of Bitcoin is I guess it's a European idea, because the Austrian School of Economics, where, the idea of having sound money with a limited supply, and most gold bugs are influenced by that thought school, comes from Europe. Then most of these guys, because a lot of these guys were Jewish, and the Nazis hated their way of thinking. And Ludwig von Mises, for example, that's a philosopher that really intrigued me in university. He was Jewish, and the Gestapo raided his home, and he had to flee to Geneva, and then he went to the States. And then in the US, you had Rothbard and Hoppe, who was actually also German, who continued, the Austrian way of thinking. Mm-hmm. And then that also influenced computer scientists that use technology to actually make the theories come into reality. And then I wrote my master's thesis about Bitcoin. But at that time, I was not interested in using Bitcoin for real estate. That came after.
So was your master's thesis around that? What was the topic of it?
Sure. By the way, if people listen to this conversation on a systemofrules.com, so asystemofrules.com. You can actually find my master thesis. You can also find it on leonvancum.com, which is the website I set up recently that has all my writing. But asystemofrules.com is an older website. And my master thesis was about Bitcoin as money. So I was looking into, is it actually possible to have a digital form of money? Because at that time, the only academia or the only scientific papers I found on Bitcoin were from cryptography. So cryptographers that were into cryptography and computer science, they talked about Bitcoin, the network, a lot. But I wanted to look into the currency Bitcoin, or the asset Bitcoin. I wanted to understand if there is actually a possibility for digital currency or digital money.
So how did you get into the real estate side of things? Is that your day job?
Exactly. That is my day job. So when I finished my dissertation in 2015, I was actually thinking what I want to do next. And I thought I'll just put all my money into Bitcoin and I'm just maybe go traveling and wait what happens over the last couple of years. Because I already had a feeling that this is actually something I should put my energy into. But I started going into real estate because I needed money, of course. I needed money to live off. And that's my day job. And that's the business I grew up upon. I grew up upon a real estate business. That's the family business. In my teens, the business went bust. And then after university, we actually started a new business. So also that was also the reason why I wanted to contribute towards the real estate company, because I felt obliged to pay back my debt, so to say, by being able to study and going to a bankruptcy just motivated me to contribute towards the family company. And we set the company up in 2015. I joined in 2016, and we are a real estate development company, and we acquire properties, and then we obtain financing, we obtain permits, and we build, and then we keep the real estate as well, and we rent it out, so housing as a service, so to say. So we don't really speculate in real estate. Well, I mean, we invest in real estate, but we are old school real estate developers.
Yeah, and you talk a lot about not necessarily you doing it, but how real estate has been used as a store of value for so long. Can you touch on this of like maybe why as society we've used this as a store of value?
Yeah, if you actually put it into the historical context and you think about humanity for the last 2,000 years, 2,000 something years, land, due to its scarcity, because land is finite, right? There's a famous quote by Mark Twain. It's like, buy land, they're not making any more of it. And it's true, similar to Bitcoin, land is scarce. But the dynamic really changed in 1971. That's when Richard Nixon announced that the US would stop converting gold into the dollar at a fixed rate. And that really allowed for a monetary system without any standard to come into existence. So what happens is that right now, we don't have any monetary standard, and governments continuously print money to fund their own activity and to pay also for interest rate. I think that's also important to understand, because I think most people think that we pay tax so the government can fund education and welfare, but most of the money that we pay in taxes is actually being used to pay for interest rates on outstanding debt. But the dynamic of currency entering the market leads to people having to invest their money, and people like to invest in real estate because it's scarce, and there are good financing options for real estate. I mean, that's something that's also obvious. It's not just the scarcity, but it's also the ability to obtain credit, then invest that money into real estate, because then you have this leverage factor. If, let's say, your real estate increases in nominal value by around, let's say, 3% every year, but if you take on a loan and you have a leverage of, let's say, 5, it actually increases by 3 times 5, which is 15% a year. So the ability to get financing from a bank makes real estate an interesting investment. That is in the context of the fiat system, of course. It's different on a Bitcoin standard, but I'm referring to it on a fiat standard.
Yeah, we'll get to the Bitcoin standard as we go down, because I think an important or An important thing that I understood, and I think a lot of people still don't quite understand it, is the monetary premium on real estate, and how this could shift over into Bitcoin. Can you just, firstly, could you explain what the monetary premium is?
Yeah.
And then how this potentially could move?
Yeah. I think the monetary premium is something that describes the amount of money that's invested into an asset, not because of its utility, but because it is used as money. So when you look at real estate, there's a utility in real estate. You can live in it. You can use it for production purposes. You can use it as an event space for retail. So it's a place to generate income. But the reason why people hold it is not only because of its utility, it's because it is scarcer than the currency we're using. So if you look at money, right, if you essentially ask yourself, what is money? Money is a medium of transaction that you use to buy goods and services. It's a unit of account that you can use to measure things, but it's also a store of value. So it's very obvious, if you want to pay me, why would I accept a currency that loses value in the future? I would prefer you to pay me in a currency that holds its value in the future. That makes it obvious that a good medium of transaction should ideally also be a good store of value. But because the pound, for example, is a very bad store of value, it's a good medium of exchange. You can use it to buy goods and services easily, but people, because it loses money over time, it loses value over time, they invested in real estate. And they use real estate as a store of value, meaning real estate is actually used as money. And the money that's invested in real estate to store value, that's the monetary premium that you're referring to. And that monetary premium, I think, can flow into Bitcoin over time. And the reason for that is Bitcoin is money. Bitcoin is a good medium of exchange. The rails on which we can spend Bitcoin do not exist as long as the rails on we can use to spend fiat money. So I think that's something that fiat actually wins, right? It's easier to spend fiat, but it will become easier to spend Bitcoin over time. And Bitcoin is an amazing store of value, and it's a great unit of account, because if you start to measure your wealth in Bitcoin, and that is true for real estate, because if most people think about the real estate that they own, it does go up in value over time. But think about it like that. Start measuring the value of your real estate in Bitcoin and not in fiat money, and you'll see that it actually loses value against Bitcoin, because Bitcoin is more finite. Bitcoin is actually absolutely scarce. So it's a better unit of account, because I think you should use the best unit of account possible to measure things with, because why you measure it otherwise, right? If you think about an athlete, there's the top athlete that, let's say, a sprinter, right? Usain Bolt. He wants a world record. So everybody needs to beat that world record, right? So he set the standard. And we talk about money. The money that's the best money sets the standards. And I usually, as a human being and as an entrepreneur, I try to set myself up to the highest standard, right? The highest standard is Bitcoin. So I think it makes sense to account for all the investments you make in their performance in Bitcoin. This might change if you do something out of, let's say, you believe it's important to provide capital to entrepreneurs that help Bitcoin to scale. So you might invest into Bitcoin companies because you think for a socioeconomic reason, this is good, not necessarily because you want to outperform Bitcoin. So investing not necessarily means you want to have the highest rate of return. It can also mean you want to have a positive impact on the world. But if it's something you do because you want to achieve a good return, you should only do it if it outperforms Bitcoin, because Bitcoin, as the first absolutely scarce money, has the best performance over time if you just hold it, because it accumulates purchasing power over time. And that is actually important, because what Bitcoin does, it doesn't create deflation. Deflation already exists, and you did a great episode with Jeff Booth, and he lays this out perfectly. The natural flow of the market is that things become cheaper over time because we have efficiencies in production and also in storage capacity of technology. So the natural way of technology is deflationary, meaning things do become cheaper over time. That's why also our living standards are rising. But the problem is, because we have inflation, meaning more money is created all the time, things get expensive. But because Bitcoin is limited, it actually is able to mirror the deflationary tendencies of the market and allows for goods and services to fall to their marginal cost of production. And if we take it to a property, to a house should cost its cost of production plus a premium for the location and maintenance. If I, for example, want to buy an apartment you lived in for 10 years and you maintain it perfectly, that obviously costs money. And if you have it in a prime location, I pay a premium for the location and I have to pay you for maintaining the property. So, of course, the cost of a property will be higher than the marginal cost of production because there will be demand influencing it. But I think that's actually what a house should cost.
Yeah, and it's essentially taking out that store of value element, because I really like the way that you put that with Usain Bolt. I think that's a good way of like thinking about it and visualizing it. Like if there is a better store of value, then why wouldn't people move their capital from one to the other? And one thing, when you were saying that, you were talking about the store of value in the pound. It reminded me of a calculation I did a few months back, and it was looking at Queen Elizabeth when she became the queen. I think it was like it was somewhere in 1950, and then she died in 2022. If she had sold all the royal family's assets in 1950, they would be 97%. They would have lost 97% of their wealth if she had sold it into the pound, which is really interesting. And a good way of framing it for a lot of people is you should not be storing your wealth in a currency, a fiat currency, for a long period of time. And this is why they flock to real estate. Are you seeing, so you obviously understand real estate and you understand Bitcoin. Are you seeing others in the real estate business understand this as well? Or is it still a bit misunderstood?
It is misunderstood overall. If you would ask me, like on average, Bitcoin is still misunderstood. But I think that predominantly in the US, because obviously I engage with people on social media, and most of the users on social media that send me messages are from the US. So in the US, there are large real estate investors that are understanding that Bitcoin as a digital store of value is just competition to real estate, which is a physical store of value. And think about it. I mean, the digital counterpart usually works much better than the analog counterpart. And there are various examples. The first one that comes to mind is a car. So if you want to travel between London and Brighton, you do it with a train or a car. You wouldn't take a horse. It's very obvious. And of course, it takes time for people to understand that. And I saw a picture also. Some people, when they started using cars, they harnessed horses in front of the car. So they took a horse or two and attached the car to the horse. And that kind of reminds me of CBDCs or crypto, because it's tough for most to understand new technologies and apply it to their existing framework of thinking. Yeah. And another thing is information. So the internet digitalized information. And today, on one single day, we create more text through WhatsApp, LinkedIn, Shopify, it doesn't matter, the description of a product on Amazon, than we did before the internet existed for all of humanity. Think about that, right? So the scale of that is just totally crazy. And if you think about storing value in Bitcoin versus storing value in real estate. So for the average individual, if I want to buy a property in London now, I mean, what's the cost of the average condominium? Is it $1 million? I don't even, £1 million, I don't know, but it's probably something around that. So the barriers of entry are very high. So I need, let's say, 100 or 200,000 pounds saved up to be able to get a loan to buy the apartment. But with Bitcoin, it's much easier. I can take 10 pounds every month and buy Bitcoin. So it's more accessible. So that means also it has the ability to create a fairer playing field, because right now the system is just rigged. It's basically set against the individual, and it's set in favor of big corporates and large nation states. And also the maintenance of Bitcoin is much cheaper. I can have 10 billion pounds in Bitcoin, and the year-on-year cost for storing that is almost zero, because what you have to do, you have to buy a signing device, a hardware wallet, set it up. That can cost you between 50 to 200 pounds. And then there are no ongoing maintenance costs, because the cost of maintaining the network, that's mining. That's also important to understand. You don't have to maintain the asset. It's the collective that maintains the network. But you, as the individual, you can actually benefit from the collective doing that. So I think that's also interesting, because the way that we think about politics and the way that we think about the individual versus the collective now brings us in a situation where money is produced in order, for example, to pay for social welfare. So people, that is not just true for the left or the right. This is, I think, a thought that would say 90% of the people have. They believe if money is created and that money is then given to people, that you help. But you don't, because what you do, you make things more expensive. And the worst thing is, as money enters the economy, a lot of people buy real estate to protect themselves against inflation, which means that real estate gets more expensive, which means it becomes more expensive to pay for rent, which means the standard of living over time goes down. So that's very difficult also, I think, to think about, right? But what Bitcoin does, because there's less and less Bitcoin available constantly, if you hold Bitcoin, everything becomes cheaper. So the individual is better off and the collective is better off. And that's a nice dynamic that I like about Bitcoin now going into politics, where the collective benefits if the individual benefits, and the individual benefits where the collective benefits. And that is a dynamic that is totally different than today. And going back into technology, because I wanted to explain that Bitcoin as a digital store of value is just superior to real estate. And I think the example of horse versus a car and sending a letter versus sending a WhatsApp message, that is kind of the dynamic that you can think of how superior Bitcoin is to real estate in storing value.
Is real estate the number one store of value globally? Is that what people use primarily as a store of value?
Yeah. So I mean, it would be different if we go through like every single culture, obviously, throughout the world. Some prefer gold, for example, to real estate, but on average, it's real estate. And there are different statistics, and one that I do like is a data point by McKinsey, and that's in 2021. They estimated that around 67% of the world's wealth, so that's 2/3 of the world's wealth, are stored in real estate. And what they believe, and this is true, they believe it's bad because it's illiquid capital. Because if capital sits in real estate, it's not available to the market. It is available to the owner because you can lend against the property to then have money for consumption and spending. But the overall economy actually does not benefit by capital being locked up in an illiquid asset, right? And that is a dynamic that Bitcoin can only also break, because Bitcoin is much more liquid than real estate. And that means if you own large amounts of Bitcoin, you can actually provide that liquidity to the market. Like you could lend your Bitcoin, and if you think that that's too dangerous, you could also create a Lightning channel and provide liquidity on the Lightning network. So there's more use with Bitcoin that's being held by the individual to store value than real estate, because real estate is not divisible. Like, how are you going to take a house and divide it in a billion pieces and make it available to an internet user?
Yeah, it's such a good point. And like at the moment, I've got quite a lot of friends that are having problems selling their properties, which is it's just an interesting dynamic to watch. Is they've got this asset but they want to sell it, and they've been wanting to sell it for a long time, but they can't sell it. which is very different to when we're talking about Bitcoin and the things you can do with Bitcoin as well on top of that. How...
Let me just let me make a comment to that, because some people, when I think about the volatility of Bitcoin, and when I talk to people that own real estate, I'm not talking about investors. I'm talking also about the individual, the 30-year-old, or a young family, a young individual that wants to save, they want to buy an apartment. I'm talking about people like that, the average guy. I'm not talking about development companies. I'm talking about the individual. They often, when we discuss, Bitcoin versus real estate, they bring up the volatility of Bitcoin and they say, I'd rather live in an apartment for 30 years and not pay attention to its price, rather than having the ability to know the price of Bitcoin every single day and worry about it. But I said, but you should stop worrying about it, because that there's a price for all the Bitcoin in the world available second by second, millisecond by millisecond. That's a huge advancement, because think about real estate. If you want to take the average price of real estate, it's very, very difficult. If you take just a country like the UK, downtown London obviously has a different price range than Newcastle, than Birmingham. So how are you going to create an average price signal for all the real estate? And if real estate is the most used form of money, because a store values money, so real estate is used as money. If it's one of the most used forms of money and there's no market price for that money, that's bad. That's not good at all, because if I want to create a list of the average price of a home in the UK, I'd have to go for city, for the area, So it's very, very complicated. But if we go for Bitcoin, every single Bitcoin in the world, every Satoshi in the world is valued the same. Of course, there are people that believe Satoshis with an inscription have more value, but that's subjective, right? Subjectively, people also prefer certain art pieces to others. Like, things are generally valued on a subjective base, but Bitcoin has a market price that's available 24/7, and that is a huge, huge, huge technological advancement.
100%. I don't think people understand how, or a lot of people, we do, we understand how big this thing is. But like when you say, for example, the store of value or the monetary premium will get sucked out of real estate into Bitcoin, you're seen as being a little bit crazy, maybe. But how does that play out in your head, looking at if that capital is then moving to Bitcoin? What happens with the housing? Because at the moment we're in a housing crisis, and it's becoming so difficult for the new generations to actually think about going on the property ladder. And what we're arguing here is potentially maybe you shouldn't be. You should be allocating to Bitcoin.
Yeah, that's the solution, because I can tell you the housing crisis is going to get much worse from here onwards. And one of the reasons is the solution that most people think is needed for the housing crisis, because the solution that most people have are twofold. Number one, it's stop raising rents. So here in Berlin, for example, there's a maximum of how you can raise rents, which I can understand why that exists, because it protects people that rent. But that also means profits go down, because through inflation, if it gets more expensive to build, but if you can't raise rents, why would you build? So that means that creates more shortage, right? Number two, people believe that social housing, for example, should be paid for by the government 100%. I can tell you, if you want to continue do that and you have large influx of immigration into a country, and UK is a great example for that, because there are statistics of how many people are coming and how many people need living space, and for how many people does the living space needs to be paid for. And this might sound a bit uncomfortable what I say here, but what I say here is not meant in a racist way or anything like that. But if the government continuously pays for rent, that means that they create that money. That money didn't exist. And if they create more money, money that exists loses value, which means living spaces go up in price. You see, so there's a dynamic here where we cannot solve the problem from within the fiat system. We have to step out of the system, and then we can solve the problem, and we can do it through Bitcoin. Because Bitcoin is scarcer than real estate, if you own Bitcoin, real estate will become more cheap over time. And of course, there's an information asymmetry. Not everybody knows that. And it's going to take a long time for people to know. And that's why there are conversations that we have. We're having these conversations out in public so people can learn. Because I don't believe I don't believe that we can have an all-knowing government that tells people what to do. People need to become more self-responsible and learn what to do. And there's an issue though with that. So real estate is in the fiat system. It's one of the most used forms of collateral. So individuals, companies, insurances, even governments own real estate and they lend against that. So there's an interest to keep the price of real estate high because basically that's the collateral our financial system runs on, including, of course, bonds and debt-based money. And that's why I believe that a nominal value, meaning if you would measure real estate in the pound, it's going to continue to go up in value because more pounds are being created. And because of that, more money is going to be invested in real estate. So real estate is going to go up in nominal value. The housing crisis is going to get much worse. So you basically have to buy Bitcoin. And now, if you think about, are you running a real estate company? If you do, think about the following. You now need to dual collateralize the Bitcoin with the real estate that you own. So if you own real estate and you use it as collateral, knowing that over time, the existential crisis that is brewing in the fiat system will get worse. And that means that real estate as a collateral will also be negatively affected. Use Bitcoin and hold it in the same entity that you use to construct, own, and manage a property. So if you want to now start a new development project, let's say it costs £100,000, take £120,000, take £110,000, take the extra 20 or 10,000 and buy Bitcoin immediately to link it with the property. So over time, let's assume that the monetary premium that sits in real estate flows into Bitcoin. By owning Bitcoin in the same entity, you actually hedged against that. And also systematically, you're hedging yourself against systematic risk. And look at 2008. 2008, the crisis that happened in 2007, 2008, that is a great example of the systematic issues of the fiat system in combination with real estate. Because what happened was that real estate was traded globally as a financial asset. Sometimes people even traded products or shares of companies that owned mortgages of real estate. So it's not even that they owned the real estate. It was actually, let's say, a leveled financial Ponzi scheme. And once the underlying asset, which was real estate, started to go down in price, the whole system crumbled. And I think, of course, what happened was people created loads of money. Quantitative easing is the term that people use. What it basically means, create money and buy assets. So what quantitative easing means is that governments create money and they buy bonds, they buy real estate to keep the prices up. And they don't let prices come down. But at some point, prices will come down, right? Because there will be a crash of some sort. But if you own Bitcoin and the same entity that owns the real estate, you won't be affected. And the global financial system won't be affected either. And that's why I bang the drum on Bitcoin and real estate so much, because I see the systematic risk of real estate being the dominant type of collateral in the system. And I really want to make people aware of the importance of using Bitcoin as collateral. You shouldn't just use Bitcoin as a store of value, but also if you run a financial strategy, incorporate Bitcoin as an asset, as in collateral, to create more resilience. Because yes, Bitcoin does go down in price, but it always finds a higher low. And within the fiat system, once prices go down, governments create money. And that means that the inherent issues of the system, they can never be solved. They just pretend that there are no issues. But that means over time, the issues get worse and worse. Whereas in Bitcoin, issues are resolved very quickly, and then the system adjusts and the price moves back up. And this resilience is very, very important, not just for the Bitcoin network, but for the global financial system.
What happens with, so I can't remember the quote, but I've heard you say something around real estate becoming a business rather than an asset. Because essentially, yeah, you are taking that store of value monetary premium out, and then it's just the utility that's there.
Yes. So there's an architect, you know, Buckminster Fuller?
Yes.
Yeah.
Yeah. Oh, what's the quote? There's a really, it's at the top of one of Jeff Booth's articles. I can't remember it, but I'll for anyone listening, I'll put it in the show notes below.
Yeah, he was a US based architect, and he had not just ideas about design, he had ideas about human coexistence, and he understood already in the 60s that, and that's obviously 10 to 20 years before real estate really started to go up in value in the 70s and the 80s, and then the 90s, 2000s, after the Nixon shock. But he saw that real estate is used as a speculative investment vehicle. And he said that's actually a bad idea. We should have an energy and time-based monetary system. And real estate should again come down to its utility value, and it should be a service. And real estate as a service basically means, from the perspective of a landlord, that you provide a service to the market similar to a chef or a restaurant. So in a restaurant, you provide food, and the food needs to be good so people come and pay. And real estate should be the same. You provide, for example, as a landlord, you provide living spaces, and these living spaces should be beautiful, otherwise people don't pay you. The reason why people pay you right now is because there's no competition, no other option. But if Bitcoin starts to be really adopted as a store of value, that is competition to real estate. Think about it like that. It sounds strange because you can't live in a Bitcoin, sure, but think about it like that. People use real estate to store value. Now we have a better store of value, so that's competition. And that competition means, I think, if you work in real estate, it's not as easy to make money. You now actually need to provide good quality properties, right? Because in London, I spent a lot of time in London as well. And what I witnessed also, if you look at student housing, over time, the quality gets worse and worse. And why is that? That is because inflation causes construction costs to go up over time, and also the price for labor goes up over time. It should actually become cheaper and cheaper to employ people and cheaper to build. The reason why that is not the case is because of monetary debasement, right? And that is also the reason why the quality of housing goes down. And housing should actually be something where there's high competition, like in a restaurant, meaning, sure, there will be shitty housing as well, because some people are just scammers, and there always will be scammers. But overall, it should lead to more beautiful houses, better living spaces, better production spaces, and it should create a dynamic where housing is less used as a speculative investment vehicle and more as a place to live in, or use for production.
That's what I want to see, because I grew up in, it really frustrates me. I grew up in like a beautiful Victorian house, like really nicely built. And the village that I grew up in, if I go back there now, there's just next to it in the fields that were there is just rows and rows of really badly built housing, and really cheap and just put up really fast. And you can see that it's done not out of love, but out of, this is an investment. And there's a big company that has done it.
Yeah.
And that's what I'm excited about, is getting back to that, of like building beautiful things again, building beautiful buildings.
Yeah, there's actually, funny side note, I learned recently Monopoly, you know the game Monopoly?
I've got a question in here. I've got a question for you, but I'll let you roll with it first, but it's all about Monopoly.
Okay, fine, interesting, because recently General Kenobi who some in the Bitcoin community might know, he built European Bitcoiners, which is a website where you can find Bitcoin-based articles in European languages, because most are obviously published in English. And he helped to publish them in other European languages. And I used to work as a freelancer, help build up that site and translated articles into German. And he made me aware of Georgism. So Georgism was basically an economic theory that was very popular 100 years ago. And the idea was that landlords or people that own land are not productive members of society, and that's why you need to tax land that is not used for agriculture or as a living space and erase all other taxes. And interestingly, that way of thinking was very popular 100 years ago, and also inspired then the game of Monopoly, because the idea of the game, at least from what I know, is whoever made the game basically disliked landlords and wanted to create the game to create a negative environment where people would learn that landlords are just rent seekers and they don't provide any service to society. Obviously, working in real estate myself, that's not like 100% true. Things are always diverse. Some people, as you mentioned, they just want to make a good investment. They don't care about their tenants. For us, for example, we think differently. We take good care of our properties and we have a certain standard that we upkeep. But it is true that the way that real estate works right now, it's not generally beneficial for large parts of the economy, but that is because of the fiat system and not necessarily because every landlord is a bad human being.
Yeah, that's really interesting. Because I can't remember because it was a woman, I think, that made Monopoly.
Yeah.
I did read the story about it a long time ago, but the question, so I can't form this really in my head. I'm really struggling with it. But it was all around. So if real estate did start to, as it loses its role as, let's say, the top dog in store of value, do you think going forward, this might sound ridiculous, I don't know. Do you think going forward there will be a redesign of Monopoly and like a Bitcoin version? Because then it's just, because in Monopoly you're going around, you're taking the cash and you're trying to buy assets as you move around, trying to buy. So I've been trying to think of what that would look like in the future, because it might seem ridiculous to generations in, say, 50 years' time, that there was this board game called Monopoly. I don't know. As you can tell, I was struggling to form that.
I like that question, because if you think about how Monopoly works is that also the name of the game, over time, just one individual wins and the rest loses. But that is not how Bitcoin works. Yeah. So in Bitcoin, everybody can win, because let's say you and me, we own Bitcoin, and now Microsoft starts to acquire Bitcoin and they buy hundreds of thousands of Bitcoin. What you would think is, because they do that, we would lose out, but that's not true. They can even own much more Bitcoin than we do, but because they acquire Bitcoin and Bitcoin is limited, that means that our Bitcoin also go up in value, right? So there's a similar dynamic in real estate, but real estate is inaccessible, right? It's not that everybody can own real estate worth £5. If everybody would own real estate worth £5, everybody would benefit from real estate going up in price. But because real estate is inaccessible, real estate going up in price means less people benefit over time. It creates actually a society where people get poorer, some get wealthier, and it's a dynamic. If you look at the world's wealth since 2020, you can really see this gap is growing wider and wider, and that is happening because more money is being introduced to the economy. The reason for this money to be introduced publicly is always, oh, we want to help people, blah, blah, blah. But actually, in the background, what really happens is there are certain interest groups that want that money to prop up their individual industries. So what politics really is, it's a game of making things look like there's a national interest by people that have an egoistic tendency. And once you understand that, you also understand that creating money is not a solution to the problem. And now going back to your question, it is actually true, because if Bitcoin becomes the dominant store of value and it's not real estate anymore or land, it's Bitcoin, and we have a system where the individual can benefit from the collective, calling that game monopoly would actually not make any sense, because there is no monopolization over time. Sure, there are certain people that will acquire more Bitcoin, like Michael Saylor, nation states, BlackRock, right? But that doesn't mean that you or me have any negative effects of it other than potentially these people trying to, I don't know, push their agenda on Bitcoin or whatever, right? But I think in the block size wars, we saw that people that run nodes, so the Bitcoin community, is still pretty strong. Because something I also want to mention, as we continue our conversations about Bitcoin, we don't even explain what Bitcoin is. We actually explain how Bitcoin can be used in certain industries. Like 5 years ago, this conversation would have not happened. But now it happens. 5 years ago, it would have been a more basic conversation. What is Bitcoin? How can you hold Bitcoin? How can you participate? And I think running a node, meaning that you become a node of the Bitcoin network, that's still like so important. And sometimes we forget that when we talk about Bitcoin real estate and we talk about these large numbers and these large paradigm shifts, because real estate will not lose its monetary premium in a decade. So I think that real estate as a whole, so if we look into the market capitalization of real estate, that will continue to be bigger than Bitcoin for the next decades. But if we go 50, 100 years out into the future, mathematically speaking, that's not possible, because Bitcoin as a monetary technology is just able to work so much better. And now also, as we're moving into an interplanetary reality, China just announced that in the next 5 years, they want to be able to reach Mars. We know Elon wants to reach Mars before them, but we already have a huge space industry, and this industry is really, really big. I think that that SpaceX makes around 100 billion in revenue a year, and that sounds unrealistic. But when you look into it, it is actually realistic, because there are loads of satellites in orbit, and these satellites communicate with each other. Some of these satellites need fuel. So there are even satellites that fuel other satellites. So there's a whole industry right now happening in orbit. And this industry needs a currency that's very fast, very, very fast. And they use Lightning. So the Lightning network on Bitcoin is used by Starlink also. So Starlink, I think, is part of SpaceX. I think it's part of the same company, right? And they receive a lot of their payments in Bitcoin, and they keep it as well. So as we move as a species out into orbit and then possibly into different planets, I think the use of Bitcoin is also going to be something that is just going to be normal, because in space, nobody has an opinion about using the yuan or the dollar. You just want to use something that's quick. It becomes a question of survival. You don't want to make any mistake. You want to be efficient. You want to save on costs. Same for AI. Of course, certain AIs have pre-programmed biases, right? So if we would think about an AI programmed by the Chinese government, it might favor the yuan. But generally speaking, AIs should use technology that allows them to work efficient. And Bitcoin is the most efficient network you can use to settle payments, obviously with their second and third layers built on top of it, like the Lightning network. And there are other interesting, I think, for example, eCash is also very interesting. It's more used on Nostra. And I don't know if you can call it a third layer. I don't think you can, because it's not really a third layer. It is more an ability to use Bitcoin as a monetary base, because Bitcoin functions well as a monetary base layer. Some people think you need to use Bitcoin to buy a coffee. You can, but you don't necessarily need to. There can also be other currencies that are tied to Bitcoin that are then used for day-to-day transactions.
Yeah, I just dug into this on our last episode, actually, with a guy called Krok. And yeah, he was talking about that with the development of Taproot as well, coming in to then have capabilities. And then we just saw that Tether announced that they're coming back to Bitcoin. So that's the USD coming onto it, or USDT. So it's really interesting to see that, and how AI will use Bitcoin But also, that's really interesting what you're saying about space as well. It makes way more sense to be using something that was born on the internet, like Bitcoin, for using it interplanetary. Yeah, all
There's
right.
a
Well,
limit, of course. I have to say there's a limit because the block time of Bitcoin is 10 minutes. So if it would take longer for the signal to reach Earth than 10 minutes, you would have to create your own blockchain. Maybe there's also ways.
yeah,
Maybe
I've
there
not
are
thought
other
about
ways.
that.
Yeah. So I just wanted. There's a limit, of course, but I think that limit will only be reached in, let's say, 500 years. So we'll find a solution then.
Yeah. Yeah, that's really interesting, actually. I'd never actually thought about that. All right, brilliant. That's been, amazing. It's shot by chatting to you. The last question is, because you mentioned this in passing, are you writing a book?
Yes, I do.
What is the book on?
Sure.
Is what I want to know.
As you would have guessed, it's on Bitcoin and real estate. Working title is Digital Real Estate, and it's gonna be the book is based on 3 main chapters. On the first chapter, I basically explain what do I mean by calling Bitcoin digital real estate. Obviously, Bitcoin is money. Bitcoin is a database of who owns what. But what I want to open up is thinking about Bitcoin as this supreme store of value and understanding that over time, real estate has replaced gold as a store of value, has replaced money as a store of value. And Bitcoin now is the better option to store value. And also, if you own Bitcoin, you own a piece of the Bitcoin network. And meaning any company that utilizes Bitcoin as a transaction database or medium of exchange, store of value, it doesn't matter, you benefit. Similar to if you own an apartment in London, you benefit from the finance district in London, the fashion district, the arts, the museums, everything. If you own a piece of land in London, you're set because you participate in all the value increase that happens in London, and potentially because there's demand from Russia, Saudi Arabia, or other parts of Europe in the north. You actually also benefit from the demand from real estate, particularly in London, globally. But if you own real estate in cyberspace, which is called Bitcoin, you participate in the value increase that happens on top of the network. So I think that's the analogy I like people to think about, right? That's why Bitcoin is digital real estate. And then I talk about what does it mean for the real estate industry. So the second chapter is a practical guide for real estate owners, real estate developers, real estate investors of how to use and how to benefit from Bitcoin, building maintenance reserves, implementing it in a financing structure, using it in a refinancing strategy, using mining to heat your home, and also potentially going public and following what Michael Saylor and Metaplanet did. And then the last chapter is about the social economic changes, how Bitcoin is going to make housing affordable, how it's going to change interest rates, because the increase in purchasing power of Bitcoin will be the standard at some point. So the standard won't be interest rates set by fiat institution, by central banks, but Bitcoin's purchasing power. And that will also change the way we invest. It will change the way that we look at consumption. It will change the way, hopefully, of architecture. And it will fundamentally change the way we interact as human beings. And that's why I think it's important to bring that in as the last chapter.
Wow. I'm looking forward to it because I think this, as I opened up this podcast, it's a great way of introducing new people to Bitcoin because a lot of people understand real estate and how that works. So by using that and playing off that to then introduce the idea of Bitcoin and what you can do, how they interact, I think that's a really good way of approaching it with the book. And I'm going to be passing that around to so many people, just like your video.
Thank you. I'll send you a copy when it's out.
Thank you. When is it out? Do you know or not? Yeah.
Yes, I do now, because I had a conversation with the publisher, and I'm going to share more details as I go along over the coming weeks. But I think September that's the date.
Yeah, amazing. Well, awesome. Thank you for jumping on and giving everyone a lesson on real estate and Bitcoin. It's good having you on, and I will probably ask you to come back on in September as well, because a lot will have changed.
Yeah, no, I'd love to, for sure. Thanks for having me on your podcast, and I'll be happy to come back.